Hey, how's it going, everybody? Anmol here. Welcome to Swing Trade Newsletter for February 15th. Hope you guys had a nice Valentine's Day and are ready to go for another day of trading. So, today was obviously President's Day, so the markets were closed. Markets will open back up on Tuesday. And let's kick things off. So, taking a look at the markets, market continued to ride this 9 EMA, continuing to move higher. Nothing to be surprised about. I was looking at this 390 area for some rejection and then move back lower. And we kind of got that, right? We shorted the market, went up to 392, all the way back down to like 387, but then bottoming tails, and now we're back up again. So the way this is trading, to me, looks like it wants to kind of get even more extended, maybe go into the $400 area, and perhaps from there we should see a substantial pullback. But at the moment, markets do look higher, and they look like they want to get that push and get really extended. So that's kind of what it looks like at the moment when it comes to the market. So we are currently obviously short the S&P. We shorted it at 390.15. We get a pretty big stop loss because I kind of expected the market to go higher. Now, how much higher it goes, we'll find out, but we gave it a pretty big stop. The plan is obviously to let it kind of go higher, see what happens, and if it holds and starts putting in a big move down, we can always add more shares short and then bring the stop loss down. That's called add and reduce, where you're not increasing your risk. You're shorting more shares, but you're not increasing your risk because you lower the stop loss. Now, at the moment, we're not doing it, but we might do that in the future. All right, so that's kind of what the markets are trading at the moment when it comes to the S&P. Another trade we shorted, we are still in, is IWM, which again, I mean, if you look at the entry was pretty solid. We shorted it about $230 at the open, and from there, we got a pretty nice move down on that second day. We shorted it, right, 230. Market IWM went straight down to 223. That's a $7 move down on IWM. So we were looking pretty good. But again, markets are holding strong, and it's possible that IWM wants to run up and make another move higher, which is possible. And again, we gave it a pretty big stop loss on IWM as well. Give it all the way over 240. We'll see what happens. And the plan is the same, where if the markets, let's say run up higher, but don't touch 240 and start pulling right back down, again, we can always short more shares and bring the stop down. So that's the plan on both of them at the moment. And but again, the monthly charts of the IWM are also, if you really look at it, it's just really, 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 really extended. And again, the only question is, it's not a matter of if we're going to get a pullback. It's just a matter of when we're going to get a pullback. And IWM, I mean, the pullback is going to be hard because the run-up was super hard as well. So that's kind of where we're looking at the moment. And and as far as the NASDAQ is concerned, that is still on my watch list for a short, right? NASDAQ is still on my watch list for a short. The reason, obviously, I haven't shorted it is because it doesn't make sense to short SPY, IWM, and Qs, right? Because basically, if all go higher, all of them will stop out, right? So either they all work or they all stop out. So the plan, obviously, is we stay in our IWM short, we stay in the SPDR short, see what happens. If the market really, really starts to push higher, then we can short the Qs and even give it even bigger stop loss. So in that case, the plan is this. Let's say the market keeps pushing higher, right? And let's say SPDRs stop out. At that point, we can always short the Qs, right? And then make money that way when the Qs pull back. So that's kind of what I'm giving it the room on the Qs, but even the monthly chart of Qs really extended. And I think if the Qs come up into $350, that is an area where I would love to short the Qs, and I'm pretty sure I will short that around 350, and then look for a move back down. So that is the plan as far as the NASDAQ is concerned. Let's take a look at the market internals and see where we are hanging out on those. So again, taking a look at the market internals, you can see here the SPDRs almost touched the overbought territory, little slight pullback, right? And now it's starting to slope up again. So that does tell me that market wants to go higher. And then this McClellan oscillator, probably goes to over, bought territory, and then we could probably get a pullback on the market. So that does suggest a move higher. Taking a look at the IWM, same exact situation there as well, right? Taking a look at the Qs, still again, similar situation. So we're going to wait on that. So I did a lot of scanning, and you know what? I have the same dilemma which I had earlier, is that I don't really feel like calling new long trades for obvious reasons. Right now, the concern is I'm looking at all these stocks on my swing watch list, and some of them are really good looking longs. Like they have really good patterns, and everything looks great, and really, really good long trades. I mean, if I wanted to call long positions right now, I can literally call 40 new long swing trades because they all look really good. They all have a great pattern, but The problem is, do I really want to go long when I am expecting a market pullback? And that is obviously not the way to go. So, that's kind of what I'm thinking at the moment. But Q's obviously is on my list on the short. As far as new trades for this edition, this is going to be a shorter edition. I only have one new trade, which is on the short side because of obvious reasons. I've been only looking at shorts at the moment. So until the market pulls back, to the 21 EMA or the 50 EMA, I'm not really comfortable going long. So I want to see a few red days before I call any new long swing trades. That's kind of my plan at the moment. Let's take a look at the energy sector here, XLE. So energy looks like it's getting a pretty nice bounce. Let me go back to the charts over here. So energy sector, you can see here during COVID, had a big sell-off. And since then, it's been trying to work its way up. So energy, if you want to watch a sector long, energy sector looks very interesting if it can get above here. That's a good-looking long trade that you guys can keep an eye on, right? Taking a look at oil. Oil is also, you can see here, starting to grind its way back up higher, right? That's also been happening at the moment. Taking a look at the U.S. dollar. U.S. dollar, had a nice bounce all the way from 24, went up to 24.70, but since then has been pulling back. Now the moment of truth in oil is pretty much here. The moment of truth is this going to be, like a bear flag that breaks down and continues lower, or are we going to bounce back on the dollar? Because the dollar really dictates what happens in the market. If the dollar starts going lower, right, then things like gold and silver will start to go higher. Oil will start to go higher. If the dollar starts to bounce, then the gold and silver and oil will go lower. And you can probably sort of see that over here, right? So see here how the dollar went higher, right? As the dollar went higher, look what happened in gold. See that? Complete opposite. Gold started to go lower as the dollar started to go higher. So that's going to be a moment of truth there as well. Silver, same thing. Silver is still holding stronger than gold. That's because silver has a lot of short interest, so there's probably a lot of short covering going on here. So silver is definitely holding stronger than gold, but gold has been relatively weak. So if you want to do gold long, which I am watching gold long, but I will only do gold long if it comes back up, takes out like 175, because this is a flag pattern, right? It had a false breakup of the flag, came back down. Now it's inside the flag, so it needs to get outside the flag again if you want to do it long. Either that, or we get a pullback to the bottom, off the flag. So that's kind of how we're going to do the gold long if you want to do that. All right. So as far as the new trades are concerned, I only have one new trade, so gonna keep it short, which is Plug, PLUG, short Plug Power. Again, the reason I'm shorting it, crazy run up from $1 to like $75, and it had a little, what I would consider a false breakout, where it had a little breakout, made a new high, but then never went higher than that. And this is where it set up this new resistance area, and this is where it set up the new support area. So it could very well bounce and break out. It could very well do a breakout, but it could also do a breakdown and go lower. And that's kind of what I'm looking for, because you take a look at the weekly chart, look at the weekly, right? Crazy run up, multiple topping tails, does look like it want to pull back. Look at the monthly chart, crazy run up, does look like it wants to potentially make a pullback lower. So we're going to be shorting Plug. The numbers will be in the newsletter, but the trade basically is to short below support, right? And then stop loss above resistance, and then look for a move back down, perhaps to the 50 MA or even lower. So that's my plan on the Plug Power. That is the only new long trade I have at the moment. And yeah, that's kind of what I'm up to. I mean, there's a bunch of long new trades I could call, but I just don't feel comfortable calling long positions in this current market scenario. As far as this year is concerned, this year so far, off to a great start. I mean, we're already up 20% for the year. So we're already doing really, really well. Now, majority of the gains literally came from one trade, which is the AUPH that we had earlier, which again was a fantastic exit. Never went higher than that. So that was a great exit there, and that's where a majority of our gains came from. That, and then the SHWZ, right? That was another nice trade we called in the newsletter. So that's where a majority of the gains in the newsletter have come from, is just these two trades. And that's what trading is all about, right? Trading is not about, most people think trading is about taking more trades. I mean, it's completely wrong. I mean, I've been doing this 11 years now, actually 12th year now, started in 2010. So yeah, about 11 years now is where I'm at the moment. And, pretty satisfied with that, and again, it's not about trading more. It's about quality, right? Quality over quantity, and also feeling good about what you're trading, right? So for example, if I was to take long positions right now in the market, sure, they could absolutely work and I could be happy, right? But what if it stopped out? Would I be happy with myself? No, right? Because I was expecting a market pullback and I went long. That's completely against my plan. So that's kind of what I want you guys to keep in mind. And again, I'm going to send this newsletter out to you so that you can review it in time, and then we'll probably have a longer edition down the line. Feel free to send me any questions, and I will try to address them in the next edition of the newsletter. Have a great one, everybody.